Today I'm going to do the second statement of financial statements, that is the statement of financial position. If you all can remember, mainly a sole proprietorship business will be prepared two statements of two financial statements. The first one will be the profit or loss statement, which we have discussed in the previous videos. And in this video, I would like to pay your attention towards this preparation of the second statement, that is the statement of financial position. Let's see what the statement of financial position is. The statement of financial position under the all syllabus is also known as the balance sheet. But now, since we are preparing it in the statement form, we have given the name, the statement of financial position. And we'll stick to that and we'll learn about the new format. So the statement that is prepared to include the balances of assets, liabilities, and equity is called as the statement of financial position. So this shows, basically the statement of financial position shows the business organization's financial strength and ability. Then the information given in the statement of financial position will be helpful for the economic decision making of the stakeholders. As you all aware, the parties who are interested to a business, the stakeholders, are paying a special attention towards the two financial statements prepared by a business. So from the profit or loss statement, as it is mentioned in the name itself, the business is trying to give out the profit or loss that they have been earned during an accounting period. Here, under the statement of financial position, they are trying to give you an idea about the financial strength and ability of the business at the end of an accounting period. Then this is the standard format that you will be tested at the exam. Here they will give, you have to write it in three parts. Business of, you have to give the name of the business. It's a business of Sadev. Statement of financial position. And here we are using a special wording as at 31st December 2019, let's say. So then always, unlike in the statement of profit or loss, here under the statement of financial position, we are making it at a particular date, and on that particular date, the values of the business's assets, liabilities, and equities will be shown through this statement. So first, we are going to list out non-current assets and then the current assets, and basically thereby you are trying to give the total figure of assets owned by a business. After that, equity and liabilities will be shown. There, first we will pay our attention towards the equity, how the equity has been comprises of. After that, we'll be going to the liabilities. There, first we will be list out the non-current liabilities, and thereby we'll move on to the figure of current liabilities, and finally we will be shown them as one figure, equity and liabilities. So as you all know, let's see what the elements of the financial statement. As at a particular date, the assets, liabilities, and equity of a business possess can also be expressed by the accounting equation, which is you are very, very familiar when you started the grade 10 accounting lesson. So there you have come across this basic theory called accounting equation, and there we have been equalized the total value of assets of a business at a particular time period, at a particular time or at a particular date to the total assets of the business by equating to equity and liabilities of it. So this relationship, assets equals equity plus liability, this relationship will be known as the accounting equation. Actually, it shows, as mentioned in the as above, at a particular date or particular time, the assets, liabilities, and equity of a business possesses through an accounting equation. The possess, the ownership of assets, equity, and liabilities of a business will be shown in an accounting equation. The values summarized for the assets, liabilities, and equity are also shown in the statement of financial position on rational basis. So here, under the statement of financial position also, we are going to list out or show the relationship, the mathematical relationship of assets equals equity and liabilities in a summarized manner by giving the values of them. Therefore, we can identify three main elements in the statement of financial position, namely assets elements, equity elements, and the liability elements. So we'll see what these assets, equity, and liabilities are. You all are very, very familiar with these three terms since you all have done this in grade 10. But at that time, as I told you earlier, you were new to these concepts. And while you are doing this lesson, when I brief them out, you will get a better understanding about them and you can revise yourself as well. So, an asset, if I get the definition of asset, an asset is a resource controlled by the business as a result of a past transaction and from which future economic benefits are expected to flow to the business. Assets means all the resources which are controlled by the business itself, and all these assets have been arose as a result of a past transaction, a transaction which you have performed already. And always the assets will give future economic benefits or future economic inflows to the business itself. So if you can remember, we have learned three features of assets in grade 10. So the same three features will be included in our definition and we'll be learning it here as well. The three features will be the resources controlled by a business, arose as a result of a past transaction, and which will derive future economic benefits to the business. So based on this time period concept or the accounting period concept, the assets and liabilities of a business will be categorized into different types. Basically, we are categorizing them into two. That categorization will arise based on the time period. So that time period we will better it's better for you to give an idea about this time period like this. So almost all the businesses are starting their business activities, hoping to continue them for a long period of time. So their intention is to exist for a long period of time, more than one accounting period. Right? This same accounting period, which we have learned as 12 months, is also known as short time period. Short time period. Let's say the accounting year, which starts from January 1st of January 2018, when it goes up to 31st December 2018, one accounting period will be finishing, and it lapses 12 months, and this 12 months will be known as a short time period in businesses. Then the second year will be another accounting period. Third year, or the year 3, will be another accounting period, and year 4 like that it will continue. So this 12 months will be known as short time period when we are categorizing the assets and the liabilities. So this continuation of few years will be, or more than one accounting period will be known as the long time period, which is more than 12 months. So thereby we have categorized the assets like this. Basically, it's two types. First one, assets. The first type will be the current assets. The second type will be the non-current assets. Examples for current assets are cash, then bank balance, debtors, stocks. All these, even though I have divided them into two, it's just one figure. You can consider it as one. So these are the current assets. All these comes under the examples of current assets. Then when it comes to non-current assets, land and building will be there, and other assets like furniture, machinery, motor vehicles, all comes under non-current assets. But I can show you a little bit of a difference based on liquidity position, which I will be doing in my next video. The ability to convert an asset into the cash form without incurring losses. I mean, the cash will be easily, it's already 100%, it's already has 100% liquidity. There's no need to convert into another form. Bank balance means the bank current account balance. So that also has a high liquidity. Then debtors, when they pay, until they pay, or when they pay, they will become a liquidity asset. And the stocks will take some, once you sold the stocks only, you will be able to convert them into cash. So the ability of converting the assets into cash form is known as liquidity. So cash has 100% liquidity, whereas bank balance, debtors and stocks have low liquidity position while compared to cash. So when it comes to land and building under non-current assets, land and building are unmovable or immovable assets of a business. But furniture, machinery and motor vehicles are movable assets of a business. Let's see how can we define these current assets and non-current assets based on the time period. Okay, current assets, the definition is The assets that are expected to be used, sold, or converted into cash within a short time period, which is 12 months, in the ordinary activities of a business are known as current assets. So the assets that are expected to be used, sold, or converted into cash within a short time period, which comprises of 12 months in the ordinary activities of a businesses are known as current assets. So this division or categorization of assets have been based on this short time period. So the examples for current assets will be stocks, trade debtors, fixed deposits, which are less than one accounting period, I mean within a short time period, cash at bank, and the cash in hand. So I have been list out these current assets according to their liquidity position. That means the ability of converting them into cash without incurring any losses. So I'll move on to the liquidity position in my next video. Okay, let's see what the non-current assets are. Non-current assets are the assets that cannot be considered as current assets are called non-current assets. I mean, assets that cannot be considered as current assets. That means assets which does not change their value in 12 months or the short period of time. Assets that cannot be considered as current assets are called non-current. So the examples are land and buildings, furniture, machinery, and motor vehicles. So this categorization have been done as current assets and non-current assets based on the time period. I think it's clear to you, and I will like to meet you in my next video about the other two elements of the statement of financial position, that is the liabilities and the equities. Thank you very much.